Hey everyone, welcome back to Corporate Decoder, the place where we unpack the mysteries of big business filings. And today we're diving deep into Walmart's latest quarterly report, a real treasure trove of information that might just surprise you. Now, before we jump into the nitty-gritty of Walmart's financials, imagine a company so vast it touches almost every aspect of our daily lives. That's Walmart, and their recent 10Q filing gives us a peek behind the curtain at how they're actually doing in the market. Especially, we're going to look at their numbers for the 3 months ending July 31st, 2025 to see if they're still the retail giant we know and love. If you appreciate insights like this, make sure you subscribe and join our Discord community linked in the description. Let's kick things off with the most important figure. The company's bottom line, Walmart, reported a consolidated net income attributable to Walmart of a whopping $7.026 billion for the 3 months ending July 31st, 2025. That's a pretty big number, right? It means after all expenses and after accounting for other owners, those who don't fully own parts of Walmart, the company still made a significant profit. Now let's break down how they got there. Their total revenues for the 3 months ended July 31st, 2025 were a massive $177.77 billion. That's up nearly 5% from the same period last year. Pretty solid growth, showing they're still bringing in a lot of money. But what's really interesting is their operating income, which came in at $73 billion for the same period. That's actually lower than last year by about 8%. Now, this might sound concerning, but we need to dig a little deeper to understand why. You see, operating expenses, which are the costs of running the business like salaries and store upkeep, went up significantly. They rose by almost $1 billion compared to last year, making up over 21% of their net sales. Now, the report hints that some of this increase is due to legal matters and higher self-insured claims, not ideal for sure. On the flip side, their gross profit, which is sales minus the cost of the goods sold, actually increased slightly to about $43 billion. This means they're managing the cost of their products relatively well, even with all the other expenses rising. Looking within their segments, the Walmart US part of the business is still the star player. Its net sales were over $120 billion for the quarter, showing strong growth, especially in grocery and health and wellness sections. And get this, their online sales, or e-commerce as they call it, contributed nearly $24 billion to that total. That's a significant chunk, showing customers are increasingly shopping online with Walmart. Internationally, things are a bit mixed. Walmart International brought in over $31 billion in net sales, a decent increase, especially when you consider currency exchange rates hurt their numbers a bit. China, for instance, saw a really strong jump in sales, over $6 billion, while Mexico and Central America experienced a slight dip. This highlights the challenges and opportunities of operating in diverse global markets. And then there's Sam's Club US showing solid, if not spectacular growth, with net sales around $23.6 billion. Their membership income is up too, suggesting their loyalty program is working well. However, their operating income in this segment did take a hit compared to last year, down to about $481 million. Now let's talk about cash flow, because that's the lifeblood of any business. For the 6 months ending July 31st, 2025, Walmart generated a very healthy $18.4 billion in cash from its operations. That's up $2 billion from the previous year, meaning they're getting better at turning profits into actual cash. This strong operating cash flow translated into a free cash flow of nearly $7 billion for the first half of the year. That's money left over after investing in their business, like new equipment and stores. This increase in free cash flow is great news, as it gives them more flexibility for dividends, share buybacks, or future investments. Speaking of investments and returns, Walmart also bought back shares worth a massive $6.2 billion in just the first 6 months of the year. That's a huge increase from last year, nearly doubling their buyback activity. This tells us they're confident in their stock's value and are returning a lot of cash to shareholders. However, it's not all sunshine and roses. Walmart is still dealing with some significant legal issues. For example, there's the ongoing Asda equal value claims in the UK, a complex situation with tens of thousands of employees claiming unequal pay. The company is committed to defending these claims and has agreed to provide some indemnification, which means they might have to cover some of the costs if Asda loses. This is a potential financial risk we need to keep an eye on. Then there's the Mexico antitrust matter resulting in a penalty of around $5 million for alleged monopolistic practices. While not a huge sum for Walmart, it indicates regulatory scrutiny in their international operations. They are appealing it though, so the final outcome is still uncertain. And we can't forget the elephant in the room, the opioid litigation. Even though some settlements have been reached, there are still ongoing cases. For instance, the DOJ opioid civil litigation, where Walmart is accused of unlawfully dispensing and distributing controlled substances. While some claims have been dismissed, others remain pending. This is a major legal battle that could have significant financial consequences. On a more positive note, there are some adjustments to their debt that are worth noting. The currency and other adjustments to their long-term debt show a change of about $542 million. This often happens when exchange rates fluctuate or when they make other financial adjustments to their borrowings. Walmart is also investing heavily in its future capital expenditures. For the 6 months ending July 31st, 2025 were over $11.4 billion, a notable increase from last year. Those investments are going into supply chain, customer initiatives, technology, and store remodels. This shows Walmart is actively working to modernize and improve its operations to stay competitive. Looking at their return on investment, ROI remained flat at about 51% for the past 12 months. This metric, while a bit complex, basically shows how effectively they are using their capital to generate profits. It's stable, but the increase in net income was offset by more money tied up in assets, so there's room for improvement here. Now remember those rising operating expenses. We saw they climbed to over 21% of net sales for the quarter. This increase, driven by those legal matters and higher insurance costs, is a key factor that's impacting their overall profitability, even as sales grow. Despite the rise in operating expenses, the gross profit rate, meaning the profit they make on the goods themselves, actually saw a slight increase. This suggests good cost management on the products they sell, which is a positive sign amidst rising operational burdens. The growth in Walmart US e-commerce net sales is particularly noteworthy, accounting for almost 4% of their comparable sales growth. This omni-channel approach, blending online and in-store shopping, is clearly a major driver of their success and a key part of their strategy moving forward. The international segment shows the complexity of global retail. China is a clear bright spot with significant sales growth, while currency headwinds impacted overall international performance. This international diversification is a strength, but it also brings currency risks that can fluctuate quarterly. Sam's Club has shown resilience with a 3.3% comparable sales increase, driven by strong member engagement, and their online sales are growing even faster than their in-store sales, which is a great sign for the future of their membership model. Now, for my take on Walmart's performance and direction. In their latest report, Walmart demonstrates a robust operational capability with strong revenue growth and a significant increase in cash flow from operations. This indicates a healthy underlying business. They're effectively managing their product costs, and their online strategy is clearly paying off, driving customer engagement. However, the rising operating expenses tied to legal settlements and increased insurance costs are a concern. They're a drag on profitability. Even though sales are climbing, the company's significant share buyback show confidence, but also represent a large outflow of cash, which can sometimes be used for strategic investments or debt reduction instead. The legal challenges, especially those related to opioids, pose a significant long-term risk. Given their immense scale, any negative outcome could have substantial financial repercussions. Their international operations, while diversified, also expose them to geopolitical and currency risks that can cause short-term volatility. Overall, Walmart appears to be navigating a complex economic landscape reasonably well. Their core business remains strong, and their adaptation to online shopping is commendable. However, they need to carefully manage their operating costs and legal liabilities to ensure continued healthy growth. It's a delicate balancing act between aggressive expansion and managing the inherent risks of a global retail giant. What do you think about Walmart's latest financial report? Are you impressed by their growth or concerned about the rising expenses and legal battles? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe for more deep dives into corporate filings. Don't forget to check out our Discord community for more exclusive content and discussions. Thanks for watching, and we'll see you next time on Corporate Decoder.